Have you ever stopped to think about how one company could just completely change the internet for more than 1 billion people? We're not just talking about shaking things up. We're talking about a move so huge, it was like they bulldozed the entire stadium and built a brand new one from scratch.
All right, let's get into it. Because the story of Reliance Jio isn't just about cheap data. No, it's a total masterclass in how to blow up a market. It left corporate giants just scrambling and completely changed India's digital future. So this is the big question we're going to unpack.
So, to really get what happened, you've got to see how things were before. Back in 2014, the Indian telecom market was this chaotic battlefield with like 8 or more big companies all fighting each other. Then, September 2016, Jio enters and boom, everything just explodes. The price war that followed was so brutal that by 2018, we were already down to 3 players. And today, it's basically a 2-horse race. The change is just staggering.
So, how on earth did this happen? Well, let's break down the first act, Jio's absolutely explosive entrance.
The speed of Jio's launch was just insane. They signed up 16 million subscribers in their first month. 1 month. To give you some perspective, that's like the entire population of the Netherlands signing up for a new phone plan in 30 days. It was this massive, unprecedented land grab that sent shockwaves through the whole industry.
So how'd they do it? With a brilliantly simple and totally ruthless 3-step attack. First, get the customers. They offered everything for free. I mean everything. Voice calls, super fast 4G data, the whole shebang. Step 2, get them hooked. The experience was truly unlimited, something nobody had ever seen before. And then the killer blow, retention. Just when the first free 3 months were about to end, they extended it for another 3. 6 straight months of free service. It was absolutely devastating for everyone else.
And you know, this quote just nails it. It really captures what people were feeling at the time. Before Jio showed up, the idea of unlimited high-speed data and free calls, it was literally unimaginable. Jio didn't just make things cheaper, they completely changed what people expected from a mobile plan.
Okay, so when you drop a bomb that big on an entire industry, what happens next? Well, you get the fallout. And that brings us to the Great Consolidation, where the market was basically shattered and then rebuilt from the ground up.
This chart, wow, it tells the whole story. By 2024, the market looks nothing like it did before. The 2 biggest players, Jio and Airtel, now control over 3/4 of all subscribers. All those other companies, they were pretty much squeezed right out of existence, turning a crowded field into what's now, for all practical purposes, a duopoly.
Of course, every war has its casualties, and in this telecom war, the biggest one was arguably Vodafone Idea, a company that was itself a merger of 2 former giants, now just fighting to stay alive.
And if you want to get a sense of just how bad the financial damage was, just look at this number. That's Vodafone Idea's total debt. It's a mind-boggling figure. We're talking over $28 billion US. It just goes to show how crippling that price war was for anyone who couldn't keep up.
The situation got so desperate that the Indian government itself had to step in. They became the biggest shareholder, taking a massive 33% stake in the company. So why'd they do it? Well, if the company collapsed, millions of customers would be left high and dry. But the bigger fear was what would happen to the market. It would have become a true duopoly, with just 2 companies in charge, which could mean less competition and higher prices for everybody.
Okay, let's fast forward to the battlefield today, because the fight isn't just about cheap mobile plans anymore. Oh no, now it's about controlling your entire digital life.
The new war is being fought right here. We're talking fiber optic cables running into your home, the next-gen 5G networks on your phone, and all the digital content you're watching on your screens. This is a full-on battle of ecosystems.
And you can see this playing out perfectly in the home broadband space. JioFiber is running its classic playbook. Go after the mass market, use its huge fiber network, and bundle in a ton of streaming apps. Airtel Xstream, though, is taking a different approach. They're targeting the premium users, the people who'll pay more for top-notch quality and who want to bundle everything, their mobile, their broadband, even their TV, all into one plan.
Of course, company strategy is one thing, but what do actual customers think? Well, this comment from a Reddit user gives us a raw, unfiltered take. For them, Jio's connection was more stable and the customer service was better. And they expressed some, let's just say, very strong feelings about Airtel's billing practices.
This fight is also raging in the world of streaming, and again you see two totally different strategies. Jio is trying to build its own content empire with Jio Cinema, offering it for free and then buying up exclusive rights to monster events like the IPL cricket tournament. Airtel, on the other hand, is trying to be the ultimate middleman, a super aggregator that just bundles subscriptions to other big players like Netflix right into its plans.
So, with all that going on, who's actually winning this war right now? Okay, let's look at the bottom line.
At first glance, this comparison seems to tell a really clear story. Jio has more subscribers, a bigger chunk of the market. They're continuing their mass market dominance. But take a closer look at that third row, that ARPO. That's where a whole different story starts to emerge.
So, it's an open and shut case, right? Jio has more customers, a bigger slice of the pie, they win, game over. Well, not so fast, because the real story, the one that all the executives and investors are obsessed with, is hidden in that one little metric, ARPU.
So what on earth is ARP? It stands for Average Revenue Per User. It's a simple but really powerful number that tells you exactly how much money a company makes from each individual customer every single month. A higher ARP is usually a sign of a much healthier, more profitable business.
And this chart? This is the twist in the story. Even with 70 million fewer subscribers, Airtel is actually making significantly more money from each one of them. Their strategy of focusing on premium customers who are willing to pay more, it is paying off big time.
And here's the crucial takeaway. For Jio to catch up to Airtel's profitability on a per-user basis, analysts think they'll need to raise prices at least twice by a pretty significant amount. This really sets the stage for the next phase of this war. It's not about getting users anymore, it's about making more money from the ones you have.
And that brings us to our final big question. The price wars were incredible for Indian consumers. They got some of the cheapest data in the world. But now that the dust has settled and there are only two giants left standing, who really has the power? As prices inevitably start to climb, who's the real winner in the end? The companies that survived the war or the customers they fought so hard to win?